Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, treasury yields fall on data, rate cut expectations, dollar gains. Gold edges higher amid bets on Fed rate cuts next year. So this is the overall sentiment on the chart of gold right now, about gold right now. And as we know it very well that for the last couple of days, gold is extremely bullish. After making a high of 2050, 2051, gold is showing retracement. Right now, gold is standing at 2044. So if you look at the chart of gold, then technically market is bullish. So as a result, respecting the trend of the market, we should be looking for buy positions only. And as we all know that for a trend reversal or for directional change, we need a backing of a fundamental factor. Without fundamentals, there cannot be a trend change. And if we try to understand the fundamentals, or if you try to understand the sentiment of the market here, then we can see that there is no sentimental change here. Sentiment of the market still remains the same. So as a result, in this present scenario, we can expect the market to continue the upside. But yes, we have news coming up in the US session. You can see initial jobless claims, so be careful, market will be volatile. Initial jobless claims is not a big data like NFP or CPI that will be totally reverse the trend of the market. But yes, there will be some volatility in the market, so please be careful. And as I always say, beginners, new traders, traders with low capital, observe the market, gain some experience, but try to close down your US dollar positions because market will be volatile. Do not gamble with your capital and hard-earned money, because when we see the market is volatile, market is going up, market is going down, we forget that we are traders, we are not gamblers. Don't make the mistake. Okay, so this is the chart of DXY, and as expected, DXY is going down. The market structure is bearish, so as a result, we can expect further downside. We need a big news, we need a big event that will come for rescue for DXY. But yes, right now there is no news that will come for rescue. So overall, the structure of DXY is bearish, as discussed yesterday, that if DXY goes up, also DXY will face resistance around this area, and we can see that DXY is facing resistance around 103 to 103.25. During the day, we can expect the same, that if DXY goes up also, the market sentiment will not change. There will be a temporary recovery and you need to plan your trades accordingly. Okay. My dear friends, before I proceed, I would like to tell you that I do not have any Telegram handles, any Telegram group or profile. So these are all scams going on in my name. So please stay away. They try to cheat people in my name. They are showing some impossible investment things. Please stay away. Those are scams going on in my name. Please stay away. Don't be a victim. And for the last couple of days, I am unable to upload videos on Euro USD, GBP USD. I'm extremely sorry, because I have come to my native place. The net connectivity is not very nice. So as a result, I am only able to upload one video. Okay, so please don't mind. I am returning today. So from tomorrow onwards, you can expect that yes, I'll be back on track. I'll be uploading videos on Euro USD again. So this is the chart of gold in front of us, and we can clearly see that market is respecting FIBO setup here. Yesterday we talked about this, and I told you guys that we have FIBO levels, but we skip this level, and we can see that market beautifully respected FIBO 38.2% retracement level as well. So where are the trading opportunities? My dear friends, the trend of the market is up, there is no doubt about it, but most of us are day traders and we don't want to get trapped. So as a result, if you already have a buy position, okay, be on the trade, no need to exit. If you have a sell, wait for the market to come down around 2030, 2025, 2080, 2020, around these levels. When market will come, try to exit. In case market doesn't come, try to exit if market breaks 2050. Yes, if market breaks 2050, try to exit, because if market breaks 2050, we will also initiate our buy positions, because for the trend continuation we are waiting for a breakout right now. 2050 is a psychological resistance. Once market will break it, Okay, market will be heading towards 2080. So if market doesn't come for retracement and you are stuck in a sell position, try to exit. If you are in a buy, then obviously you will be enjoying. And those who are looking for fresh opportunities also, you can initiate a buy position once you will see the market is going up again, market is going for a breakout above 2050. Okay, and those who are stuck in sell position, wait for retracement right now. Wait for retracement on 2030, 2020. Once you'll see the market has come, try to exit. Okay, and again I'm repeating, in case market doesn't come, try to exit at breakup, because market will be heading towards 2080, because after 2050 we do not have any immediate strong resistance. And during the day, if market falls, then we can expect 2030, 2031 to be the next support. This is the next support on the chart of gold. Because of FIBO 50% retracement level, we can see the market has already tested FIBO 38.2. So this time we can expect FIBO 50 will come for the rescue. And how much we can expect once market will bounce? Scalpers, you can expect around 40 pips. Yes, my 40 pips. You can expect around 40 pips. Then we have 2027. Okay, we also have 2027 as the FIBO 61.8. Then we have 2020 plus 2018. You can see that three levels that we have derived on the chart of gold are totally based on FIBO right now. So as a result, do not expect a trend reversal. If you're a scalper, if you're a day trader, if you want to be on a safer side, once you'll see the market has bounced from a level, try to exit by 40 pips. In comparison to 2030, 2027, 2020, 2018 is a better level, because here we have FIBO 78.6% retracement level, and along with that you can also see that the previous resistance will also be acting as support. So you can consider that if gold comes for um, retracement, then 2020, 2018 is the strongest level where we can expect a good bounce, big bounce. But otherwise 2030, 2027 are also not bad. It depends on the volatility of the market. I have told you guys plenty of times that volatility plays a major role. So if the volatility is not much and you see market going down, you can definitely expect 2030, 2031 to act as support. Simply switch to lower time frame. Once you see market bouncing, hit the buy button. So respecting the overall trend of the market, it's better and safer to be on the buy side only. And buy at retracement or buy at dip is the best trading strategy. If market comes to retracement, we can look for buys around these levels. This is our S1 support one, this is our S2, and this is our S3. S3 is the strongest, but still in this situation we can expect the market to bounce. If market bounces but 30-40 pips, try to book if you're a day trader. Okay. And on the other hand, if market doesn't come for retracement, market goes for a breakout, we can look for a buy above 2050, because 2050 is acting as a temporary resistance right now. And if you're stuck in a sell, try to exit around these levels. And in case market doesn't come for retracement, try to exit if market goes for a breakout. Because sometimes we think that if we if we exit, then we will lose a huge chunk of our capital. But we forget that if we do not exit at the right moment, you will be losing your whole capital. Don't make the mistake. And my dear friends, as I have already announced earlier, that the world's most affordable forex trading workshop that I conduct after every 2-3 months is back again. I conduct a workshop in both Hindi and English language. दोनों language में ही होता है. And less than a week left. Yes, the Hindi classes are starting from 6th. So dates and everything is mentioned on the website. The link is in the description. You can see Hindi classes 6, 7, 8, and English 11, 12, and 13. You can join now also English participants. You will be getting free updates, analysis on the WhatsApp group. And my dear friends, this is a 3 days workshop followed by 1 month support. You can see here these are the benefits that you will be getting after joining the workshop. I have also shared my story so that you can understand that nothing is impossible in the market. And as I've already told earlier, that this workshop is not for complete beginners. I have designed the workshop only for those people who have been struggling with the market for a long time, unable to make money. So that's why I have also pasted a questionnaire so that you can understand whether the workshop will be useful for you or not. And these are the topics that we will be discussing in the workshop, and these are the weekly topics. So 3 days workshop and 4 weekly classes, so total 7 lessons. And see, this is the WhatsApp number. After the payment, you just need to send a screenshot to this number. I'll add you to the group. Okay. And the best part is the fees. World's most affordable workshop. So yes, 3 days workshop with 1 month support is only $15, rupees 1,000. And these are the benefits that you will be getting. Trading takes time. So as a result, if you are looking for guidance, if you're looking for personal sessions, you can also sign up for 6 months or lifetime support. These are also very much affordable. You can see everything is mentioned on the website. These are the payment methods. Okay, bye bye, take care.